Hello and welcome to another Monster Candle Trader video. Today we'll be taking a look at the US Tech. As per usual, we are looking at the 930 open and we're looking to trade to the midpoint of the opening range gap using the first presented FEG. Again, my internet went out, so I had to actually run and got a data plan. So this trade right here that I should have been in, I am not in because I wasn't around the chart to actually take the trade. So if the market is to trade back up in here, I'll look for a late entry there. If that actually fails to pan out, I'll just use the, oh, that's London, so my bad. I'll just simply use a different PDA rate to actually enter, like this potential breaker here. All right, let me go ahead and set up a trade right there. Why is the numbers so goddamn jagged, man? What's going on here? All right, let's see if it actually triggers me in. Actually, let's use one. And then I'll leverage it after it leaves the trade. Let's see. But I at least like the rejection of the midpoint. It's going back up. Let's see if it actually triggers me in this time or not. Okay. All right, massive wick. So I can use this as a discount wick once the market trades below it for another entry, possibly. I'm just curious to see if this particular setup here would actually trigger me into the trade, because I am planning on let's put this to 10 o'clock, the 10 a.m. silver bullet. Just like put it here. Okay, I'm in at 9 pips. Okay, so I am planning on, let me go ahead and annotate this properly, 10 a.m. silver bullet. So once this market breaks close above here, I'm planning to add another lot onto the trade, and then to actually, pivot it into a greater setup there. Because yeah, all right. So it's pretty good that I'm in this trade. I want to see it break and close below this specific wick. And like, this is a unique setup that I saw. Right now, it will pretty much be the same, but not bad. Break, close below it, use the premium as an entry is the idea that I'm going for. And if I seem a bit more ANSI is mainly because I'm late around the chart, and I should have already been inside the trade here for the first presented FEG. And all of this would simply be me just waiting on the trade to play out, because it's a no news day. So what you can anticipate for days like this is for a lot of consolidation before the actual move. And here we go, we get some displacement going. As I said before, I want to see it close below here, which it did, which is lovely. We do love to see that in these parts of towns. So here's the breaker. This is where I'll be using to an additional lot onto the trade. Let's make this purple, and let's make the midpoint black arena. So once it trades and close below here, and this is a, before I do that, so once the breaker actually forms, I'll highlight it. In the meantime, I'll pay attention to the P arrays. That's right there, which would be an order block in this case. There we go, which the market rejected off of quite handedly, I must say. I'm looking at the midpoint of here. I want to see this hold the price to go lower, right? So I don't want to see the market break and close above it there. That is not something that I like to see. Now it's this week that I'm going to be paying much attention to the market. If the market is to break and close above this wick, I am willing to terminate the trade and just look for an entry, say at 10:30. And so this order block here is holding up pretty nicely. Get to the 1 minute. All right, and the trade is out. There we go. All right, so the market is trading back into the first presented FEG, and the main question is going to be around how the market reacts. It's pretty much the same concept that I've been jawboning about or preaching about for the last couple of trades. Is just not using it only as a entry mechanism, but using it for narrative. So we're in the 10 o'clock hour, meaning that the market is definitely going to make its move during this time period, and as such it is important to, once the market does make its move, it'll be important to note that at that particular point, the market is actively ready to actually move to the intended direction, right? So there you go. So you want to see how the market reacts off of the different PDRAs that you've been focusing on, so that way you can accurately find yourself in the correct direction for when the macro actually decides to start spooling in any particular direction. My bias is still to the midpoint of this range, along with London's low, which has yet to be taken, which is relative equal low as well. So, and there is a massive gap down here that the market would love to go into and rebalance. So there's a lot going for the market actually trading lower. Now it's in this wick right here into the midpoint, and the market is doing a bit of back and forth movement within it. Now, what is important to note, right? So let's take a look over to the left and see if there's any important PDRAs to pay attention to. So right here would be a bearish order block. Wick here, market trades into the wick, into this area, travels lower. But most importantly, I'm paying attention to here. So the market trades into here, run through this FEG, which was what was using to take price higher, and it closed below it here. So once I have a re-entry like this will be my entry. Of course, we'll be risking $10. There you go. And we'll be targeting that London's low as we highlighted earlier. I realized that I didn't enter off the first presented FEG because there might be a chance that the market wanted to use it to actually reach for the relative equal highs above here. Instead, I waited for the market to confirm that it's willing to reject off of it once, twice in the midpoint of this, below this inverted FEG, and use it to take price lower. Now, here is where you want to pay attention to the opposing PDRAs, right? If the price is bearish, bullish PDRAs should start respecting it. So this PDRA here, you don't want to see the midpoint respected. You want to see the market break and close below it. So those are the traits you watch once price is moving in your direction, for you to have confidence that it will continue to run in your direction. We've seen that it's disrespecting here. So the next PDRA to pay attention to would be here. And of course, you want to pay close attention to this wick, because the entirety of here would count as the gap, right? So you want to see the market run and close below this entire area here and use it. Because right now, from what I'm seeing, this ultimately should be the full focus as an inverted FEG to take price ultimately into this area right here. And I will be holding the trade for the full run today, because there's CPI tomorrow in which I won't be trading. So more than likely there's going to be a huge run today. So I'm not quite getting the full scope here. Let's see. I wonder if I can just put it on here and show it there instead, if that would show the full scope, because it's not covering the entirety of the area that I would love for it to do. I'm gonna open IC markets and have it run there. There it is. Because I'm using my seat break and close below here. So this isn't concerning to me anymore, right? So from this point, as I mentioned earlier, I'm anticipating the market to make the full run. And since I don't have like my phone, it's going to be a very annoying watching price, because I would have pretty much I won't have anything to do while price actually just goes through. So let me go ahead and add back the indicator. So this is a midpoint measurement. And at this point is where you'd want to say break and close below here. I'll go ahead and move this up so you can take a look at this. This is the point where you're looking to add, right? You're looking to add on to the existing trade that you have at this point with these kinds of retracement. Because if you're confident that the market is bearish, these retracements are only opportunities for you to add on more to your already established lot. And if it's the case that this is to, say, run one more time into these wicks and is to close against me, actually, I'll just put it to the 20, right? Because I'll be looking for a re-entry either way. So I'll give myself enough room. So if the market does want to run against me, instead of like looking for another re-entry and the market just takes off, I'll go ahead and just expand my stop. So if the market is to ultimately come up and take me out here, then that would be a different scenario than before. So let's do this.